Hi, welcome to Market Conversations. Today is January 24th, and I want to talk about a stock that you should keep on your watch list. This stock has been very undervalued. But before I continue, I just want to let you know that I am not a financial advisor. This is just for entertainment purposes only. Also, if you don't mind hitting that like button, as well as subscribing if you haven't already, and leaving me a comment if you enjoyed this video at all. I am trying to reach 1,000 subscribers by the end of this month, and I think I can get there with your guys' support. And thank you all for who already subscribed. Lastly, I will be going over some option strategies at the end of this video if anyone is interested. So let's get started. The ticker symbol is BB, and that is Blackberry. Blackberry has been having a lot of momentum lately. If you take a look, on Friday, it was up almost 10%, and then after hours, it was up 6.77%. If we look at the 1 week chart, 37.90%. 1 month, it's been up 110%. 3 months, 198. 1 year, 123, and then 5 years, 113%. If we do take a look at the volume is almost double of what the average is at 120 million versus 69 million. And we have 10 analyst ratings. 10% says buy, 80% says hold, 10% says sell. Okay, let's look at and see what the bulls and bears have to say about Blackberry. So the bulls has to say the Spark Suite provides the widest breadth of endpoint capabilities Blackberry has offered to date. Blackberry is a widely recognized leader in its Internet of Things software application and has the top market share in automotive infotainment. The autonomous vehicle industry offers promising upselling opportunities for Blackberry's QNS software. So if you haven't known already, Blackberry used to be a phone business. It was a dying phone business. They couldn't keep up with Apple's iPhone touchscreen phones. And so John Chen, who is a CEO, turned things around, and now they are a cybersecurity company. See what the bears have to say about this. Blackberry has yet to prove its ability to grow organically as a software company. Blackberry has been losing share in its primary markets of unified endpoint management and automotive infotainment. Blackberry doesn't have the scale, breadth, or name recognition to compete in enterprise software with giants like Microsoft and VMware. Earnings coming up March 31st after hours, so keep that in mind. So it says here, they engage in the provision of security software and services to enterprises and governments. It offers cybersecurity consulting, enterprise consulting, endpoint management, and unified endpoint security. Take a look at some news. Blackberry started picking momentum back in December. It's because they signed partnerships with Amazon Web Services. So let's take a look at this. They have been up almost 120% this month. Blackberry phones fell out of style over 10 years ago, trading at a small fraction of its June 2000 all-time high of nearly $150. A lack of catalyst over the past decade had given investors little to hope for. In 2013, CEO John Chen revamped the company to shift its focus from mobile phone handsets to cybersecurity and the Internet of Things. Chen's ideas are starting to pay off. Over the last year, Blackberry has announced major partnerships with Amazon, Zoom Video, Texas Up Onward Mobility, and Huawei. So on December 1st, Blackberry announced it had partnered with Amazon Web Services to develop and bring to market Blackberry's intelligent vehicle data platform, the IVY. And this will be able to allow automakers to use the software for the smart and autonomous electric vehicles being developed. So that will be a huge catalyst if they are able to be successful. Last August, Blackberry announced it would be partnering up with Onward Mobility to help the tech startup produce Blackberry branded smartphones with 5G technology. If you know 5G will be huge this year, and they are growing. It says Blackberry has posted 116 employment opportunities over the past 30 days for positions available all over the world. These are all signs of bullish sentiments, guys. So right now, the price is at $14.99. It has definitely gone up a lot in a short amount of time. I do expect a pullback next week or so, but if it does continue to go up and you don't want to miss the run up, you can consider starting a small position and either average up or average down. So there are also options that you can trade. You can buy options, buy puts if you are bearish on the stock. You can also sell cash secure puts, and that's what I like. If we take a look at the January 29th, so January 29th expires Friday. I don't like short-term call options just because it's so hard to predict which way the stock price will go. But if you are considering short-term call options, you can consider this. We have a 15 call that is at the money, and for that option, one contract option, it will cost you $117. If you go in the money, it'll be a little bit more, not too much more, $130. Let's say you want to sell a cash secure put. Now you can collect a premium instead of paying the premium, but you need to put up the collateral. Let's say you want to sell a 14 put. You will receive $149 up front, but you need to be able to put up $1,400. It is a lot of money. But the further out you go, the less you will have to pay in collateral. So if we take the 11, we'll get $18, but you have to put up $1,100. Also, a good way if you're planning to buy 100 shares of Blackberry anyway at a discount. But if we go further out, let's say March, now you're looking at a higher premium. Let's go to a 10 put. You get $85, and now you'll receive $1,000. And for call options, now it will cost more to pay for the option because of the expiration date. It's further out. So you have more time for the stock price to go to your strike price. One call option is $276. That's at the money. You can also consider selling a leap option. That will definitely give you extra time because when you buy a call option, time is not on your hand at all. At least with leap option, you have at least a year for the stock price to hit your strike price. When I do a leap option, I like to look for a delta of 0.8 or above because that will closely replicate the actual stock itself. If we take a look at the 10 strike price, okay, the delta is 0.80. So every time Blackberry goes up or down $1, Blackberry will go up and down 80 cents. And look at the volume. It's 1,300 and the open interest is 21,000. So you know there's a lot of people looking at this leap call right here. This is January 21, 2022. And it's actually not bad. It costs you half of the price if you were to buy this call option versus buying 100 shares. With this, it's $735. Let me know what you think of Blackberry. Are you guys bullish, bearish? Are you planning to buy shares on Monday options? Or are you just going to wait and sit out and wait for a pullback? Thank you so much for watching. If you got this far, please don't forget to like and subscribe. Also, leaving me a comment below. Thank you.